Have you back now. Let's continue our conversation and talk to Mr. Kenneth Rikume, who takes it up from where Prof stopped to talk about issues for 2025. A lot of developments that we've talked about in the first half, but we'll keep on that pace. And Mr. Kenneth Rikume is partner and director with tax reporting and strategy at PricewaterhouseCoopers. Thank you so much. Happy New Year to you. It's good to see you today.
Happy New Year, Tolu, and wish you all the best in 2025.
Indeed. I think it's good for us to take it a step backward, away from how I started with Prof, to look at major economic steps or economic developments across 2024, around the business environment. What are those notable ones that you think that we should just touch on before we now start to look at projections for 2025?
Right. Tolu, I think it will be important to highlight some of the challenging situations and the economic headwinds we've seen in 2024, particularly in the area of inflation, which was, as at November, was tracking at almost 34%. I think that is perhaps one of the most important issues. And linked to that is the issue of the exchange rate, obviously. That actually skyrocketed at some point up to 1,700, 1,800, but it's now back under control, between 1,500 and 1,600 naira per US dollar. And that had an impact on, the price of items, goods, food, energy across the economy, and that has led to significant inflation. In reaction to that, the central bank has actually tightened monetary policy to ensure that the excess liquidity in the system is mopped up as much as possible, and this led to a significant increase in monetary policy rate to 27.5%. Now, inflation is driven largely by energy in the sense of the removal of subsidy, which has had an impact on petrol prices and, of course, transportation. And, of course, the impact generally on the price of, the crude oil is US dollar based. So any product out of that, including diesel and so on, would be impacted by the exchange rate. So that has, had an impact significantly on the Nigerian economy. And in reaction to that, we've seen the hike in interest rates. Of course, that has put pressure on companies because they now have to contend with what sort of funding or capital structure they need to have. Because, borrowing at 30%, for example, without generating, with the pressure on the demand side for goods and services, you may not be able to hit the margins that would be able to pay and service those loans. So those perhaps are some of the significant issues. But in reaction to that, government has implemented some fiscal reforms. It's no longer news. I mean, the first subsidy, the trying to harmonize the exchange rates, those happened in 2023, leading to 2024. But government looked at certain things, and I'll put them in different buckets. The first one is tax reforms. Implemented tax reforms, there are essentially three that I would like to note from 2024. The first one is the incentivization of the gas sector through the executive order that grants midstream companies investment allowance of 25%, and also a tax credit for non-associated gas that allows us to optimize the gas value chain. And for me, that was an important one. And I'll come to some of the reasons why that's important. The other one, tied to that is the VAT modification order of 2024, where we see the government granting VAT exemption for feed gas AGO, imported LPG and CNG, and also equipment and infrastructure and assembly parts for CNG, LPG, biogas, and electric vehicles. Now, this sets a clear intention that government intends to look at gas as an important transition fuel for how we achieve our net zero commitments as a country. We are largely a gas reserve country, and I think that some of these policies match up to that and ensure that we are able to commercialize our gas and utilize them efficiently. The other one we saw in 2024 is the withholding tax regulations. It came out in July, effective July, but later the Gazette came out and now it's going to be effective 1st January 2025. And it has a lot of new elements, tries to simplify, withholding tax generally, and also exemptions for small businesses. The other thing we saw in 2024 having an impact in 2025, we don't know when it will happen, is the approval of the Economic Stabilization Bill, which aims to amend over 15 laws. And, many of them are tax laws, Fiscal Responsibility Act, and even ensuring that, the central bank empowers the central bank to attract, international funds. And then the third bucket is the implementation of the new minimum wage from 30,000 to 70,000 naira per month. And that's supposed to provide relief for low-income earners. But, my view is that that's not going to be enough, as wage increase alone is unlikely to sustain real income gains, due to inflationary pressure. So managing the inflation issue in 2025 will be key. And we also saw all the price stability interventions from the central bank, from CRR to monetary policy rate and so on, and the exchange rate stability. So I'll look at that monetary policy in 2024, the tightening of it as one of the important aspects in 2024 as well.
Great stuff.
So for me, those are the important things. And I think the government is looking at stabilization into the future as being crucial.
Great stuff there. Touched on very key points there. But let's look at this GDP figures now practically. First quarter, 2.98%. Second quarter, I think we did about 3.19%. And the third quarter is about 3.46%. There's been this growth. Are you optimistic? Are you also thinking along that line? I've had analysts like you say, it seems like we are getting there at par with what's been projected by the likes of the IMF and World Bank. What do you make of that?
Yeah, so I like to say that two buckets of countries in Africa, and it is said that 9 out of the 20 countries that would experience significant growth in the economy in 2025, 9 are from Africa. Incidentally, in that bucket, we have, outside that bucket, we have some countries that have experienced significant GDP growth in the past due to commodities and their reliance on commodities. In that bucket, you'd have the likes of Nigeria, South Africa, and Angola, who are seeing GDP growth close to almost 2 digits at some point. And then now, at the turn of 2025, those 3 economies, it is very doubtful that there will be in those 9 countries that would experience significant growth. Outside that bucket, you have the likes of Ivory Coast, Tanzania, and so on, that it is expected that they will do at least 6% GDP growth. And one of the reasons why you see those countries achieving that is because they did not have the advantages of these commodity-rich countries, and they had to diversify their portfolio. So Nigeria is not going to see that significant GDP growth. I think in the budget, there's an expectation that we'll do 4.4 or 4.6. I can't really remember the number. But for me, that's going to be ambitious considering where we're coming from. I think most economists put it that Nigeria may be able to achieve something in the region of 3.1% to 3.5% average in 2025. And that's important, right? Because if your population growth is growing faster than your GDP, then it means that people would essentially become poorer because the GDP per capita, begins to drop. So I think that's an important factor. I think we're not yet out of the woods because we're not going to see significant GDP growth. But I like some of the elements of the budget because government is looking at stabilization. I think we've seen the big devaluation or depreciation, depending on how you want to look at it. And, the price is now a bit more stable. And when you begin to look at the fact that our foreign reserves has grown to 40.2 billion as at November, it means that the central bank now has, a sufficient war chest to be able to intervene in the FX market, coupled with some of the things they're trying to do, particularly the electronic foreign exchange market platform, which they implemented in December, which saw a significant drop in the exchange rate at some point, and ensure that there is more transparency around, foreign currency transactions. I think that also shows some signaling that government also wants to look at the formalization of the so-called parallel market. Now, if they're able to go there and intervene in that space, then we'll begin to see significant stability in the exchange rate, and that would ensure that we're able to achieve some of the objectives which we have set for ourselves in 2025. So even though the GDP growth may not be as good as we expect, I think there are positives because the trajectory of things is that now we are in a stabilization, and we continue to see improvements over time, but it's not going to happen overnight, and certainly not in 2025.
So what are those key issues that we should be looking at, businesses, individuals, looking at in 2025? Government is head-bent on bringing down inflation, whatever it takes. Government is saying inflation must taper down and all of this. So what other issues do you think businesses should be considering in making their projections for 2025?
Yeah, I was already mentioned the fact that, GDP growth, most economists put it at 3.1 to 3.5%. There's also the issue of the importance of fiscal sustainability, and addressing that in the future. Currently, our deficit and the deficit shown in the budget, suggests that there would also be additional government borrowing into the future. And I think businesses need to look at that. I think from the global perspective, one of the things I think businesses need to watch out for is the fact that the US Fed is also cutting rates, and that may attract more, foreign portfolio investments and maybe FDIs to some extent into the country, which is a good thing. But there are also concerns, and that's the risks that businesses need to model out and see what the implications would be. That the Trump government is also looking at the fact that a lot of production needs to come back into America, and otherwise there will be imposition of tariffs on certain imports. And I think particularly looking at imports from China, potentially Mexico, and so on. If that happens, hopefully it doesn't happen, we could see a reversal of some of the stabilization we've seen globally in terms of inflation. And that would then mean that will continue to tighten even into the future. I also expect, with all the measures that have been put in place and the stabilization, that inflation rate will drop. And I think a lot of economists expect this. In the budget, it's anticipated at 15%. We don't think that that's going to happen. It's going to be in the region of, or at least we expect it to be in the region of 22% to 25% or thereabouts. And that would bring a bit of solace to producers, manufacturers, and businesses, because the inflationary pressures they've experienced in the past, they can begin to see more improvements in terms of their margins. So we expect that things would improve, and some of the exits we've seen from the business angle in the immediate past would become a bit loose. Now, what will then happen is that in the short term, there might be tightening, but in the medium term, interest rates might actually drop, and that would have significant impact on the ability for businesses to take more risk and look at innovation and improve their balance sheet as well. So other things that businesses need to, if I were to advise businesses in addition, is that don't wait for a regulator to come with minimum capital requirements. We're already seeing that in the banking sector, where the CBN has come with minimum capital requirement. With devaluation, it means that companies' capital has been eroded in dollar terms. So I think organically businesses need to look at recapitalization. I know that the insurance industry is also looking at that space, but even any business at all needs to look at their capital and their capital structure to ensure that they have sufficient buffers to take risks into the future. So those for me are perhaps the headline issues. I mean, of course, I have other advice for businesses that are not economic, but maybe I'll hold on to that until we speak on that later.
Okay, yes, we need to talk about those expectations now, because government has a role, private sector has a role, business owners have their own role. Of course, everyone has a role to play when it comes to economic growth and development, particularly when we talk about inclusive growth. So what more are you going to tell businesses, and even sincerity also from government? Many will say, look at what's happening with the oil and gas industry. Investment seems to be coming in. Look at the Shell Bonga deal, about $5 billion US. So it shows that Nigeria is also doing something right at a particular point. But what more can be done to make more of all of this flowing as we move on, particularly FDIs?
Yeah, so for me, it's the lens you used to look at it, right? When there is a threat or a risk, there's opportunity, right? Now for that Shell Bonga deal, the investment has come in because the Shell, as an international oil company, is looking at diversifying their portfolio from onshore and shallow water and looking at deep water, because that's where they get the sort of return from their investment that they are looking at. But they are divesting as well. In 2024, we saw 2 divestments. Both of them have received approval. We saw the Mobile Producing sale to Seplat, and we also saw Shell sale to Renaissance. So on the one hand, it looks like a divestment, but on the other hand, you then see local participants seeing the opportunity and trying to plug in. There's also the Equinor deal, the sale to Chapal Energies. So on the one hand, the IOCs may be looking at divestments and looking at their portfolio. Remember that they're also under pressure, to optimize their return and also look at sustainability in terms of, the type of investments. But for the local participants, we also need to look inwards and say, okay, what are the opportunities for us? And that's where these guys have actually seen the opportunity and have played. So one risk for someone is an opportunity on the other hand. The other thing, so when those divestments are coming or happening, it's an opportunity for shrewd investors to look at the valuation and see whether they can get those assets on the cheap and see whether they can scale up, bring in some additional investment and create, additional value for their investors. And I think those opportunities are there. Mm. The other thing I think businesses should also look at is, looking at improvement of their cost across the business operations. One of the things that is going to ensure sustainability of businesses into the future is how you're able to drive value from each naira that you spend. And businesses need to look at everything from their capital expenditure to the operating expenditure and see whether those expenditures are producing the right result. This advice I would also give to government. In 2025, there's an expectation based on the Supreme Court judgment that the local governments will now receive direct PAC allocation. So already we are asking questions at the federal level, at the state level, at the local government level. What is the productivity of each naira spend? And I think the World Bank put out something recently that about a third of the expenditure of governments in many developing countries are unproductive. In extreme cases, you have white elephant projects where the project, the totality of that investment yields no result. I think that fiscal responsibility and transparency is something that I would expect more from the government leading into the future. The reason why is because citizens in 2024 and maybe some bits of 2025 have sacrificed. A lot of people believe in the reforms of the government, but people now need to start seeing the result of those investments that government is making. Our experience as citizens of government should not always be negative. We should always also have that positive outlook in terms of, our public education, in terms of our public hospitals, in terms of meeting or engaging ministries, departments, and agencies. Are we getting positive vibes, for lack of a better word, when we experience, our government? And is our taxpayer, for lack of a better word, nairas or dollars, yielding the right result for us as citizens? So transparency and accountability will be key in 2025.
Mr. Kenneth Irikume, I can thank you enough. This has been a very interesting conversation. Partner Director, Tax Reporting Strategy, PricewaterhouseCoopers, Mr. Kenneth Irikume, I wish you a profitable and interesting 2025. Thank you so much.